It's about that time of day again, folks. My name is Joseph. Thursday evening, September 27th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is range bound with a triangle. So my focus is on two try failure patterns, but I'm paying close attention to the swings that make up the triangle tomorrow morning. The S&P is bearish with a trading range tonight, and that tells me to fade those breakouts at the highs and lows of the range tomorrow. Nasdaq is bullish with a spike in range as well. So I'm looking for buying opportunities using the range expansion level as support tomorrow morning. Want to stay tuned on that Nasdaq here for tonight. Gold is bearish with a spike in range pattern of its own. That tells me to sell the high using that two try failure pattern. And of course, we can't forget about the euro. The euro is bearish with a big wedge pattern tonight. But I'll tell you, I love wedges. They're great patterns. We'll talk about that in a moment. But it's the hidden channel overhead that I really hope to use for selling opportunities tomorrow morning. Well, we're all geared up for some volatility tomorrow morning. You better pack a lunch tomorrow, kiddos, because we have the end of the week and the end of the month coming together here. We're going to get some fireworks, and we're likely going to get some profitable trading opportunities right along with it. As always, I am gearing up for a great Friday newsletter here for you guys and gals tonight. Great opportunity setting up for Friday's trading session. Before we jump in and put the plan together tonight, I want to remind you, if you're watching me right now on YouTube, you can download the entire text description of this entire video. It's right on my blog here at sidewaysmarkets.com. I'll leave the link in the description of this YouTube video. Also, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. And if you like what you see here tonight, please help support this channel by subscribing, and don't forget to hit that bell icon so you get notified every time I post another video. And don't forget, if you want to stay in tune with everything we do, if you want to make sure you never miss a beat, head over here to the blog at sidewaysmarkets.com and make sure you join our mailing list. You know I'll never waste your time with any spam in your inbox, only the good stuff. To never miss a beat, grab that newsletter list in the upper left-hand corner, right, and join the transformation with me. Don't forget, social media, lower left-hand corner. I'm always posting exclusive content on my many different social media channels. You can follow me in the lower left-hand corner. You can download all the charts from tonight's video by following that link below the video tonight. And then don't forget, if you're not a member here at School of Trade and you'd like to grab that free pass to come out and join me as a member or a guest of the trade room, right, grab that free pass in the upper right-hand corner, and I'll see you on the inside, right, as part of your free pass. All right, guys, let's bust this thing open. We got a big day coming tomorrow. Hope you guys had a great week so far. But as always, we're only as good as our next trade. So let's get ready for tomorrow. Tomorrow's Friday, September 28th. We've been talking about this here all week this week. We got the end of the week. We got the end of the month. I know it's not the last day of the month, the last trading day of the month. The next trading day, once we hit the closing bell tomorrow, will be October 1st. I can't believe we're already talking about October right now, but it's upon us. So we're just about ready to wrap up the week and wrap up the month. Anytime this happens, we always expect to see some volatility. You've got the end of the week and the end of the month. Basically, as we get into the end of the day, into the end of the week, into the end of the month, traders start taking bigger risks. You've got traders who are way up on the month, right? Traders who are way down on the month. And there's always a kind of a whiff of desperation in the price action as we go into that last day of the month. You know, you probably remember this. You know, I remember this distinctively being a new trader. You know, end of the day on Friday, end of the month, you know, desperately trying to make some money to get myself out of a hole. I think every rookie probably has gone through that feeling where you're sitting at your computer at 4 o'clock on a Friday wondering, why did I just lose more money, right? Because that's usually what happens. But that's the personality, that personality of desperation that creeps into these markets. And at the same time, with the rookies going pedal to the floor at the end of the day, end of the week, end of the month, you've also got professional traders who know better, and they're backing off, right? So volume tends to dry up a little bit, personality changes. It can be a very different environment as we get later in the day, in the end of the week, end of the month, cyclone, right? That oftentimes happens. So that's the key. That's the key here for tomorrow. We're also watching prior week levels tomorrow, right? So last week's highs, lows, and closes. And don't forget, no matter what tomorrow is, end of the week, end of the month, Friday mornings are always early in, early out, right? Early in, early out, early in, early out. So you've got to have a really good reason to be trading on a Friday after 11 o'clock Eastern time, right? So keep your lunch date tomorrow. Make your plans with your friends tomorrow afternoon, right? Because the plan is to be done trading after 11 o'clock Eastern time. You're more than welcome to babysit some positions into the close tomorrow, right? But don't push it too badly there after the lunchtime hour. As you can see here tomorrow, we don't have much news here, right? We get that personal income number at 8:30 Eastern time. So that's definitely something that we're expecting. And let's face it, right? We had the whole situation happening on Capitol Hill today with Judge Kavanaugh. Tomorrow, I don't know. Do we get a vote tomorrow? I don't know. So I would expect that's going to be that little oops surprise. I'm sure that might be playing into tomorrow as well. You know me, right? You know me. My personal opinion is we show up early every morning. We work hard. Keep your eyes open tomorrow, right? Could easily be an end of the week, end of the month surprise, right? A big breakout of some of these ranges. So we're definitely keeping our eyes open. We're keeping all of our options open, and we're going to have a great day tomorrow. Don't forget, we're going to put the plan together tonight, and then of course we'll trade that plan together right tomorrow morning. So jumping into our charts here for tonight, right? 8:30 news tomorrow is all we have on the schedule. We got crude oil, S&P, Nasdaq, gold, and we can't forget about, right, that mighty euro. Starting up tonight on oil, the black gold, the Texas T, crude is range bound with a triangle and a measured move on the chart this evening. If I zoom out a little bit here, right, you can kind of see there, here's my triangle. I got those trend lines coming down, trend lines going up. I wouldn't argue with you if you went a little bit further out and said, nah, this is the range right here. Whatever you want to call it, whether you want to call it a range or you want to call it a triangle, it's easy to call it a triangle here. It looks like the triangle is probably what most people see right now. And so, basically a triangle tells me to fade the breakouts. Triangles are basically just ranges, right? So we're looking for that 2-try failure pattern, right? I want to go up, 1 try, 2 try, and back down in. We saw a great example last night, right? We were talking about that bear channel last night, and to get that 1, right, 2, got to pull back off the moving average, right, and then back down in. So that's what we're looking for again tomorrow, right? 1 try, 2 try, back down in. Same thing, 2-try failure pattern, 1 try, 2 try, right, back down in. I want to stay away from that middle. I want to buy those lows. I want to sell those highs. The one interesting thing, though, right, triangles tell me there's a big difference in a triangle and a regular trading range. A triangle always tells me to really focus on these swings, right? Those the kind of the pivots, right, of the triangle, because usually that's where you're going to get, right, your big support and resistance levels, right? So stay out of the middle, right? Let's get down to some of these swings, 1 try, 2 try, back up, right? Let's get up to some of those swings, 1 try, 2 try, and then back down. Another thing you want to keep in mind here on a triangle is the vertex, right, or the intersection of these 2 trend lines. Now, we're going to see a wedge later on these charts tonight, which you'll definitely want to stick around for, because wedges are also very, very useful patterns in the same sense here. And that is, when the triangle is really wide, you can buy low and sell high inside that triangle. But just a heads up, because once that triangle becomes really narrow, now you've got resistance coming down overhead, you've got support coming up below. Buyers aren't going to want to buy into resistance. Sellers aren't going to want to sell into support. So typically speaking, once these triangles get into their narrowest of points, we usually see some big breaks, right, up and down. Now, that strong attempted breakout, when the triangle gets too narrow, right, where might they be trying to go here? Well, I would imagine, right, a measured move may be a good objective up for those bull breakouts going higher. And of course, we got that weekend gap, right, that's still sitting there right now at 70.71. So that would be, right, a target for those bears if they can get a breakout. But make sure you remember, though, in order for us to get a breakout, what do we need? That 1, 2, 3 breakout. Now, I'm not drawing this to scale right now, but let's take example back here. Had a strong leg up, right, the overnight session on the crude. So surely we're bullish now, right? Not so fast. You can see that's one try. Now remember, if you watched last night's newsletter, it's got to pull back to the moving average before that becomes a second try. Then we get to roll back over. So let that early morning rally from earlier today, let that be a good reminder that even if we do break out, we do get nice and narrow here. Even if we do break out here, we still have to hold that pullback and run. If we can hold that pullback and run, then we can gladly take that new channel and we'll look for what we call a hidden channel pullback pattern. We'll try to find that high, right, and grab a buy off of that low. Same thing on the downside, right? So we get nice and narrow here, right? Gets too tight, and all of a sudden, bam, we break down. That is not enough to call this a breakout. What I'll be looking for tomorrow is I'm going to look for that pullback to the moving average, and this is where we decide what we do next. We know the odds are much higher for us to go back into that range. So I'm looking for that as a 1 try, 2 try, 2 try failure pattern to go back into that range. If they can hold that pullback and run, well, hey, now I'm good to go. Now let's find that new channel. Let's draw off of these lows, bring it up to that high, right? If there's any way to draw a trend line off that high, we'll use that too, and we'll create that level of resistance there. All you're trying to do right now is find some resistance to sell, right? And we have to assume that target now is down at that weekend gap, right? Down at that weekend gap. So again, on the oil, it's relatively easy. Stay away from that middle, right? Stay away from that middle. If it's quiet tomorrow morning, stay patient. Wait for the 1 try, 2 try, back up in, 1 try, 2 try, back down in, or strength, pullback strength, 1, 2, 3 breakout, find that new hidden channel for the hidden channel pullback, or 1, 2, 3 breakdown, hidden channel pullback down to that weekend gap. I think the most important thing here for tomorrow is to stay patient if it sits in the middle. Again, it is end of the week, end of the month. We should see some explosiveness tomorrow, but with this whole hearing thing hanging over everyone's head, I wouldn't be surprised if there's a little bit of waiting due tomorrow. So definitely make sure you stay patient and don't force it. How about some S&P? The S&P is bearish with a trading range and a measured move on the chart this evening. The trading range is the big clue. It's a big clue, but there's another big clue, right, I want to talk about as well. The trading range is a big clue telling us to buy the low and sell the high using that 2 try failure pattern, right? You've got that, right? You've got that trading range. And again, we're looking for, as we saw earlier, 1 try, 2 try, back up, 1 try, 2 try, back down, 1 try, 2 try, back down. Well, 2 try rule, 2 try failure, we want to buy the low of this range. But there's one more very important factor going on, and that is the momentum coming down off of this high. Now, pretend for a second that you don't know about this range. This would be a spike in channel pattern, right? It'd be a spike in channel pattern, right? Pretend for a moment that you haven't seen this chart. You don't know about this range. All it could be would be a strong bull run up and then a 1, 2, 3 reversal going down. The point I'm trying to make here is I'm concerned about trying to buy this 2 try failure. Because oftentimes when we get this much momentum whipping around, you've really got to be careful with sellers waiting to sell up there, right? Getting short off that high. So the bottom line is that yes, I want to buy these lows, I want to sell these highs, but I'm concerned here that the strength of this move going lower is going to give sellers a lot of reasons to be looking for a trap above that high. So that's honestly what I'm looking for next. I'm looking for that trap to send that market lower. Now, you're more than welcome to try to sell this, but just keep in mind where you are. You're in the middle of that range. Not the most reliable thing in the world, but it's worth staying on the cautious side here. It'll be overnight, low volume. I'm going to look for that next leg lower. Once I get that next leg lower, that will constitute now first try, second try, and I'll look for that run back higher here. So we're looking for that, right? We're always looking for the two try failure patterns. Just like on crude oil, I want to stay away from this middle, right? Stay away from the middle. One try, two try back in, one try, two try back in. I do have a resistance trend line overhead. I really don't have much here. I mean, maybe there's a little bit of support trend line there. It's very vague. I don't know enough. You can't really see enough of that to really trust that. We'll look for it tomorrow. Maybe we get it back in and we can draw that trend line. Then that becomes, a triangle. It may end up as a triangle, just like crude oil looks like right now. But right now, the big thing is the range. The range tells me one try, two try, back in. Range tells me one try, two try, back in. And of course, don't forget, right, we've got that strong momentum, right? That strong momentum heading lower here. That tells me we're probably going to see, right, a bit of a trap high, right, and another leg lower. So let that be 1, 2, and then we can look for that move going back up into that range. And some food for thought here. If we get, for example, a one try, two try right at the edge of the range, we don't really have a lot of options. But if we can get this one try, two try down around the low of this range, or take this range and add that range expansion down here, right, which is why I've got that battle zone where it is. If we can get ourselves a little bit further outside this range, we'll be able to get a couple more opportunities. So it'll be that two try failure, and then of course into that hidden channel pullback. So keep your eyes open on this tomorrow. If we can get a nice run outside of this range, then we can look for a couple different patterns. We can look for that two try failure pattern, and we can look for that hidden channel pullback pattern, right? So you got that strong move down, that's 1. We try again, 2. Remember, it's got to come at the moving average. 3, we jump up, pull back, grab that high, grab that low, right? Get that to line up for some additional support and buy off of that low. Again, this is what we call a two try failure, right, into a hidden channel pullback. Now, we've talked about a lot of these patterns so far, right? Two try failure patterns, hidden channel pullback patterns, trap patterns, right? When a market really moves quickly like this, right, oftentimes it'll come up at a little trap high. We'll see a trap right off of that high. I want to give you a lot more examples of these patterns because, really all I can do right now is speculate on what's going to happen tomorrow. But if you'd like to learn more about the patterns I'm talking about, if you'd like to see literally hundreds of examples of real patterns, right, that we see every day in our trade room, right, it's really easy. I have a great free trading course, and I'll drop this in the description of the YouTube channel here, in the video here. I'll link it up in the upper right-hand corner. So pause the video, grab that free trading class, especially if you're a new trader, because it'll really save you a bunch of time. It'll give you a lot more information so you can make the most of this time that we have together every night on our nightly newsletter. Not to worry, pause the video. I'll be here when you get back, but that will definitely be something you want to invest your time in here this weekend. Grab that free course, learn more about these patterns, learn more about the trading strategy, right? You'll be thankful that you did. So that's the plan there on the S&P. Now, what does a breakout look like? We've talked about this briefly on oil, right? A strength, pullback, strength. A breakout is ultimately a one try, two try with a successful second try. That's all it really is. Now that second try needs to have some punch to it because it needs to be evident that if it goes lower, the buyers are walking away. If we do get that second try to punch through, we'll find that new channel. I'm looking for some level of resistance now, right? And we'll look to sell this sucker right up off that high. Target on the way lower at this point now is going to be this measured move, right? Down around that 29.03. target going higher here for a breakout will be up at that high at 29.41. So it's going to be that 1, 2, go, find that new channel, right? And then we can buy that pullback from there. Again, the most important component of a successful breakout is strength, right? That 1, 2, 3 breakout, right? Strength. That's the most important factor of those breakout patterns. S&P looks pretty good. How about some Nasdaq here? Nasdaq is in a similar situation, but obviously very different here. Nasdaq is clearly bullish with a spike and range pattern on the chart this evening. The spike and range is bullish. That tells me to look for buying opportunities using a 2-try failure pattern below the range using support levels. So we have that clear bull trend, right, up into that double top. Anytime we see a double top on the chart, we know that we now have a range. I take that range, I copy and paste it down, and that creates a key level of support. Some of the best trades you'll find will come off of that support level below that range. At the same time, right, if I can get long off of support levels down here, I got some targets waiting in the same basic idea, right, up there at 77.03, almost 77.04. It's also a nice big round number, right, for those bulls to hunt for. So the spike and channel tells me I want to buy below that low, and I'd love to incorporate this range expansion along with some of these prior, right, swings, right? Those are pretty much the last previous swings we had before the market pulled back. Now, with that said, we do have, again, with that range here, we do have a 1-try, right, a 2-try, and potential failure going back higher here. The only thing that concerns me on this particular example is that the actual failure happens very much back in the middle of that range. And you'll notice the risk-reward ratio on this isn't that great, right? It's not that great. Your risk is like this. Your reward is like this. It's not that great of a risk-reward because all we really know is that retest of the high. Now you can lie to yourself and say, well, yeah, but we're trying to go up to that 77.03, but that's just hopes and dreams right now. Right now, all we really know is that we've got an objective going back up to retest that high. So this really puts a spotlight on this area down at 76.5, 76.50 area, right, in that battle zone. So again, we're looking for that 2-try failure, right? I wouldn't be surprised here if we see this thing kick back, 1-try, 2-try. Look for that failure up into that hidden channel pullback, right, for that run back up into that range. Now, what if we go higher here? You know, what if we do go higher? What if we run higher here right now? What would it take to continue being a buyer up here? I've really got to see us get through that 77.03. I mean, I can't even tell you how many times I've seen markets, right? They jump, they pull back, 1-try, 2-try, right? And what do? They jump up. It looks like they're never going to stop, and they just sit and sit and sit and sit, much like oil, right, where it jumped up and just sat there, and then eventually, right, came back down. How do you trade that? You know, how do you sell a bull market? How do you sell a bull market that's just hanging out up there? It's a good question, right? What I try to do is I never try to call a top in a bull market because that's just asking for trouble. So what I have to do is if we can go lower, it's 1-try, 2-try, and you can buy those failures, right? That 2-try failure pattern, right? And again, it'll look just like this, but it'll be at a better location, 1-try, 2-try, and then back up. But remember, right, it's the 1-try, 2-try, that failure, and then remember that hidden channel pullback? Right, that hidden channel pullback pattern, that hidden channel pullback, that's the pattern you're looking for on the opposite side, right? So we go up, 1-try, pull back to the moving average. Remember, don't forget about that moving average. 2-try, let those buyers try twice. Okay, if they break through it, well, perfect. Then we know we have a new bull breakout and we're off to the races. Okay, but I want to trade. I would rather take fewer trades, but make them a lot more reliable trades than try to predict which of these things will break to that high. So what I'm looking for is I want to see that drop back down in. Now we find that new hidden channel now, combine the top of that range, right? And now we can sell it. Back down we go. It'll look a lot like this, right? Where it'll go up, 1, up, and right, and then back below that moving average, hit it and roll, right? That's what it'll look like. It'll look like buyers are trying to buy it. One try, two try, will come down. Buyers try to buy it, and then whoops, right? Now we know exactly where, right, we can sell going back down into that range. It's just a little bit of getting that momentum to shift down to the bear side, and then of course, right, we get the writing on the wall for the buyers, and we'll look for that run back down. So again, I'm more than welcome to trade breakouts as long as we have proof, strength, pullback strength. We got to really punch through, right, that 77.03, and then we can keep going from there. Don't forget too, we get a round number, right, down around that 7600, right, that round number as well. So if we happen to go strength, pullback, strength, the downside, by all means, right, I'm not permanently bullish here. I'll gladly be a bear. I just need to see enough proof to make sure that we do have what we need, right, to get short. I want that momentum to turn back around, much like the S&P. Right? You know, the S&P turned its momentum back around. S&P had that big run higher. Right? S&P had that big run higher. And if they would have held on up here, right, we'd still be bullish right now. But after seeing it hold and run, right, this is no longer a bull market. Yeah, I mean, it might be a halfway pullback, but the momentum is not bullish right now. So I can't be a buyer until we get that to turn right back in my favor. You go back to the Nasdaq now, we're still bullish, right? We haven't quite turned yet. So we have to wait for that run through, get through that support area, then we can start selling this puppy right down to that big round number, down for the runner down at that 75, 77.5 area tomorrow. So that's the plan there on the Nasdaq. Remember, stay away from those middles, right? Avoid the middle of those ranges. One try, two try, back up. One try, two try. Don't sell a failure, sell the pullback, right, as we go back lower, right? And again, if it is slow tomorrow, right, stay patient. It will be worth it. It'll be worth it because we should get a couple good sets of fireworks tomorrow at some point during the trading day. How about some gold? Gold is bearish with a spike in range, a spike in channel, and a reversal line on the chart this evening. The spike in range is the only real concrete pattern we have at this time. That is that strong move down into this range. That's pretty much all we know for certain right now, that spike in range pattern. Anytime we have a trading range, we always know we're looking to try failure patterns, right, back up. And I know I sound kind of like a broken record this week because we've had a lot of ranges this week, but hey, at least you guys are getting you're getting a Harvard education here on those ranges. So again, we're looking for that one try, two try, one try, two try, and then back down in. How do we trade a range breakout here now? It would be what we call a fake out, breakout, pullback pattern. Remember, what you want to see is take that range, nope, not that range, right? Take that range expansion, right? We want to see this market get through that range expansion first, right? Get that low lined up, get that moving average down. Come on, Joe, get your drawing skills in gear, right? And then two-legged pullback to a sell. Right, so you're using these levels, which are support now, you're using them as resistance here, right? Get that moving average below, and that's the way you'll sell, right? That move as we go lower. It'll probably end up being, if it goes lower here, right, some sort of new channel, and we'll sell, as you can kind of see how that comes together, right? If we get that strong push down. So again, spike in range is the only real concrete pattern we have. If it goes lower, we're looking for that strong break, right? Two-legged pullback. We call those fake out, breakout, pullback patterns. At the same time, if we don't go lower, right, if we kind of sit here inside this range, it's one try, it's two try, it's back down in. Remember, we're looking for that nice jump up. Get that moving average coming over. Let those buyers try to buy it. At that point, we know where their stops are, and as soon as we start seeing it fail, we'll sell right into those stop losses. And again, these two-try failures, they're used in trending days, range days. I mean, we use them in so many different ways. If you want a full breakdown of that pattern and literally hundreds of examples of that pattern, I've got that free trading class in the upper right-hand corner, as well as linked up in the description, and you can grab it. I'm also, obviously, we're bearish here right now, so I'm just trying to find any levels of resistance I can incorporate. This trend line here is a big clue as well. I'm not sure how much we're going to be able to use that. I think right now, if we do keep going lower, it'll be more likely this becomes a new channel, right? So we'll keep an eye on that tomorrow. But this it doesn't look like the writing's on the wall right now for it, but it could. If we start seeing that, we can then look for that sell right off the high of that, off the right high above it, right? So if we do keep seeing this, if we do keep seeing this channel develop here, we'll look for sells off the high of the channel, right off the swing highs above that channel. Those are always nice, easy, reliable trades. And then if we really go sideways here, if we sit here sideways, again, I'm looking for resistance, right? We got resistance up here. We've got resistance up here. It won't surprise me. It won't shock me if we see this thing kind of jump, right? Jump up, kind of stumble its way back, right? Up again, and then that's your one try, that's your two try. We know where those stops are, and we're now looking to sell back down into that range. So now we know, right, if we get that roll lower, find that new channel, sell off that channel. If it goes sideways here, stay patient. One try, two try, back down, right? Don't get spooked for a big strong break up. Make them hold the pullback if they can't. The writing's on the wall, right? And we'll sell that sucker back down. How do we reverse? What does a reversal look like here on the gold for tomorrow? A reversal, again, strength, pullback, strength. The 1, 2, 3 reversal pattern. Strength going against the trend, pullback to the moving average, right? And then strength coming off the moving average. Right, it's got to be strong. Again, look back in time. Lots of examples on gold, right, where a strong move did not successfully break the trend or break the range. It's not enough to get a strong move. We have to get that strength that can hold the pullback. Then we find that new channel. Then we'll draw trend lines off that low, find that support, right, and we'll look for that pullback, right, to be a buyer going back up. If we can get long here going back in, then obviously we know where we're going. We're going back to that 1200, right? 1200 big round number, right smack in the middle, right, of that trading range. What else was down here on the gold? Yeah, see, the next stop here is that 67 point. I mean, that's I can't even see it on this thing, right? But it's a long drop down to any real milestones. It's a little bit too much to expect for tomorrow, at least. Typical price action, anything's possible, but unlikely for tomorrow. But we have a lot of room to go to the downside here on gold if this thing continues here for tomorrow. I look at the chart. Anytime we see this much movement in one day session, the next day is probably going to be a range. So keep your eyes open for a range tomorrow. If we see the market continue here going sideways tomorrow, again, one try, two try, back down in. That's the plan, right, where we oftentimes see when we have that much movement in one day, that's usually what's going to happen, right, on that following day's session. Wrapping up tonight here on the euro. The euro is bearish with a wedge, a channel, a hidden channel, a measured move, and a prior week low. Let's just toss that on top of it, right, just for good measure. The wedge is bearish and getting narrower. Here's that wedge, lining those up, lining this up, right? That is a wedge. Okay, now that wedge is bearish, obviously. It's getting narrower with each new candlestick, and that tells me, just like we talked about on that triangle, right, on the crude oil, to expect a decent pullback, right? Expect a decent correction off of those lows. Now, the wedge also tells me that where these two trend lines come together, that's going to be the objective. Okay, so you can almost see now too. Look where we are right here. We're right there, right? We're right at that objective. On top of that, you can also see there's the prior week low, right? You look at this euro chart and you go, holy Christmas, they're going all the way back down to that prior week low, which makes sense because tomorrow's the end of the week, right? Prior week levels become big targets. So momentum is clearly bearish right now. I want to sell. I want to sell at resistance levels, right? That's what I'm really looking for here right now. So where can we find some levels of resistance? I think the most important clue here, if we take that low and post it up at that high, I mean, heck, you could even go all the way up here, right? And put it up there, right? Now you've got overhead resistance. Now, it's going to be a bit too much, I think, if we go all the way back to 18,000. That will probably be a bull market at that time. But this area here, though, I really like this area right here. You've got these two swings, right, lining up with that trend line, right up in here, right? That spot looks great because then if we can get up, right, one try, two try, it won't be ridiculously bullish at that point. Momentum won't be too horrible. It'll be a risk small, right, to earn large, right, heading back down to retest that low. So I'd like to see that jump up. Let's one try, pull back to the moving average, let them two tries, right? We know where the stops are. We can now sell into those stops, right, into a two-try failure. But then remember, don't chase after it. Wait for that pullback now, right, and sell off that pullback. So it's literally that two-try failure into that hidden channel pullback, right, on the way lower. Now, a lot of times when we see these wedges, right? A lot of times these wedges, they end with a range. So keep your eyes open here for a range tomorrow down here. It'll be a bear bias with that range. What does that mean? One try, two try, failure back down. Be very careful trying to sell below this prior week low. You get the measured move hanging out right there. And I would imagine that even if we get a nice little punch lower here, we'll probably end up seeing it come back into that prior week low area by the end of the session. So be very careful trying to sell right on a breakdown below 17,000 tomorrow. We're going to really want to see some extra vigor right from those bears if that's going to be the case tomorrow. So it's pretty simple at this point here. We're trying to go up, one try, right? Two try, back down into that hidden channel pullback. And again, hundreds of examples of these patterns in that free trading course. Grab it in the upper right-hand corner. Grab the information icon in the upper right-hand corner or in the description of the video here. What does reversal look like? Reversal possible tomorrow? Absolutely, right? We had that big range from earlier this week, last week, and this week, right? So this area here is absolutely a magnet here for us. If we do get this strength, pullback, and strength, now we know where we're trying to go. Want to find that new bull channel, right? Buy the low of that bull channel. That's going to be a pretty easy pattern to find once we get that strength, pullback, and then strength, right? It's all about personality on those pullbacks, right? It's all about personality on those pullbacks. So make sure, again, if we run higher here, strong move up, we're not bullish yet. You got to hold that pullback. If you don't, we're going to collapse back down, right, and look for that sell. Okay, if we do hold it though, now we're talking, right? Now we've got that new channel. Now we can buy those pullbacks. And again, we're thinking of around that 18,400. We know that range. And of course, some nice big targets up there around that 18,800, 19,000 if this thing really, really turns and runs tomorrow morning. As always, guys, it's a pleasure to have you all here with me here every night on this nightly newsletter. I hope you learned a lot. I hope you use it to earn a lot tomorrow. Don't forget, be careful tomorrow, end of the week, end of the month, right? Volatility should kick up here tomorrow morning, but it might be a little bit slow, though, at the same time. So that inconsistency can be dangerous if you're not paying attention. Don't forget, if you want to learn a great strategy and a great trade room to hold you accountable, to inspire you to reach your goals, and to come out and execute that strategy every day, check out our beginner, intermediate, and advanced classes. I help people transform from ordinary traders from ordinary people into extraordinary traders every day in my trade room. You can learn more on our website here at schooloftrade.com. Grab that live support tool. Hit me up with a chat message there. Call me toll free here if you have any questions. And as always, I've got the best free trial in the business. I'm a little bit biased, obviously, but I got a great free trial, great free trading classes here at School of Trade. I got a free pass for you to come out and join me as a guest in the trade room as part of that free trial as well. I'll put all the links in the description of this YouTube video. Excellent work this week. It's been a great week so far. We got one more day. I will see you guys tomorrow morning, 8 o'clock Eastern time. Adios, amigos. Bye-bye for now.